So the title of this video is half true. I haven't fully quit trading, but I have quit trading retail concepts. What do I mean about retail concepts? Well, I'm talking about when you're looking at using patterns in the market, like the double top or the double bottom pattern in the market, or even looking at using wedge patterns, those bullish and bearish flags. All of those types of patterns in the market are where you're going to find that those institutions, those banks are going to know exactly what you're looking at and how to manipulate you out of the markets, and you're going to lose money every time. So I'm going to briefly go through on this chart to show you why I'm not using these patterns in the market. I'm also going to go through why I'm not using trend lines either. They are very subjective to draw trend lines, but also very much manipulated, just like those patterns. Then I'll go through and I'll share with you why I've quit those concepts to now start only using supply and demand trading concepts and smart money concepts, which I think you need to be using in your trading as well to see those profits in the markets. So bear with me through this video. We'll go through so I can start explaining to you why you need to change the way you look at the markets and do it from today. There's plenty of information in this channel for you to learn to trade with the supply and demand smart money concepts. Now, if you're not already part of this channel, this community, make sure you subscribe today and don't forget to give me a thumbs up on this video if I give you some great value in today's video. So first, I want to go through the concepts of the trend line in the market, how it's going to manipulate you, and you're going to end up finding you get frustrated because you're looking at those trend line break retests, expecting the market to continue in that direction, and it doesn't, and you get stopped out, but then the market does go in that direction. If this has happened to you before, leave a comment below and let me know if this is something that happens to you time and time again. So first, let's look at an area here on the chart. Let's look at previous swing to the upside. We mark off this as our trend line. And then we just remove to a nice thin line. So we can see here that the market had a nice bounce on a couple of occasions. We had a final push through, and then we have a big bearish candle that breaks the trend line. Let's go closer into these candles. So after we see this big bearish candle, you're looking for the market to come back to test the trend line from below, and then you're looking for the market to continue to fall away. Now this does happen. We have this small push down, and we just remove those two lines again. And this is where you're looking for the market to continue to fall with a new trend to downside. Now many of you will be looking again for another pullback here. Okay, to then look for another sell lower after we see this big expansion to the downside on this bearish candle. But what actually happens is the market doesn't do that, and we rally back to the upside. So why does this happen? Well, this again was as I suggested in the beginning of this video. This is how they manipulate you out of the market. They know what you're looking for here. And what actually happens here is when we see the market dropping away, okay, and we break this structure here in the market, understanding a supply and demand approach, we have this area of supply that sits at the top of the move. And where does the market want to go back to? It goes back to that supply zone. We then see the reversal, and obviously we can see the market's just dropped away. Where did it go back to? The previous lows in the market. So that is where you can start using a supply and demand concept instead of using a traditional retail trading concept where we're looking at a trend line break, retest, continuation. Now what also happens here is that we see the manipulation phase where we see these lows here in the market. We get a big run through and the high of this previous candle, and then straight afterwards we go into this area here of supply and we see the drop back away, breaking this structure. So if you didn't understand the concept of what was happening here, then we see the break to downside, pull back again, and we can then draw out, let's say, this area here. Now, understanding the use of these zones in the market, we can see we're going to pull back again and then a continuation to downside. Now, we can use the trend line still, and you can see what actually happens is the market does come back again to retest the trend line, but at the same time as we go into the area of supply. It's understanding the use of this concept over retail. You can then see why the trend line would still work, but only if you understood where the market was going to come to start with. So that's one reason why I don't use retail concepts of trend lines. Now let's look at another one, the wedge pattern in the market. I'm going to show you now how those patterns get manipulated over and over and how you will continue to lose if you're trying to use those patterns. Let's have a look and see if I can find some of these wedge patterns. So we have one here in the market. So I can draw this pattern out. And I also see another one potentially here. And so let's first look at this first pattern. Now what's happening here? So when we're using retail patterns like the wedge, we're taught to look to take the entry once we see the breakout, looking for the lows to be hit. Okay, so these patterns, you're going to use the height here to the low. Once you get that breakout, extend it to downside. Okay, so you're expecting the breakout to continue in one direction or the other. Now on this occasion we break out to the upside, we never break to downside, and you'll be looking to extend this on the breakout point. So we're expecting price here to at least go up to this high at this point. Now what actually happens here is that, again, they know what you're looking at to trade one of these sort of patterns. And we can see we have the breakout to the upside. Great. We see the nice big expansive move to the upside. But then what happens straight away? We drop off and we continue to fall. Now what happened here was, one, we had this manipulation of this high. Again, manipulated you out of the market. Straight away we had a close back down, a final push up and a bearish close. We also have understanding imbalances in the market, which is something, again, you'll learn with smart money in this channel. We have this bearish area of imbalance. We actually test it to the pip. We then push up into the imbalance and we see the reversal out. So can you see how you would have been manipulated thinking you were going to buy this market from a reversal? Now what I mean is we were at this low in the market looking for the continuation to the upside. Now that never happened. Let's look at the next one. Okay, this area of imbalance, by the way, and the manipulation is that smart money concept this time of taking a trade. Where the other one we're looking at was the supply and demand concept. Now understanding them both together is key. Now we have the same thing again. We have the pattern to downside. Now we have the breakout now again to the upside, a big bullish candle. If we're using the concept again of the width of this wedge, when we see the breakout, we're expecting prices to come up to this high, or at least take these highs and a continuation. But this again does not happen. Instead, what we see happen is we see the actual manipulation. Just get this line in the right place. So this last low, manipulation to the upside, and then we have a continuation to fall. And look at that market all the way down. Now, if you was even just targeting these previous lows, that's a great risk to reward once you see this happening. Now, on this occasion, again, we'll be looking at an area of supply. This is my last nice bullish candle of supply before the breakout to downside. Yes, it's a tested zone, but we're marking off this high. We can see this high in the market. We push above that high, and then we drop away. So that is a great entry again, understanding this concept. Now, if you had taken an entry here, which most probably my students understand this is a tested zone, we'll be looking at this as an entry, targeting those previous lows. That's just over a 10-to-1 risk to reward. Yes, I know this is in hindsight, but this is sharing you why these patterns do not work. They are manipulated over and over. Both of these patterns here you can see are manipulated. And again, you're understanding, thinking this is a low in the market and we're going to continue higher. Just as you thought here, this was a low in the market and we were going to continue higher. But this didn't happen. So that is showing you those two concepts, understanding why these patterns don't work. Now let me have a look in the chart. We'll go back and see if I can find a double top or double bottom pattern to show you the same thing. So let's have a look. We need to find this a double top. So, okay, so here's a pattern in the market I want to show you. Understanding the double top and double bottom, you can see here we have a high in the market. Now a double top will form at the high of the market. We're looking for a double top to form. Then we look to take the market down to previous structure low. If it's a double bottom, let me just show you what I'm talking about. We have a double top. We're looking at this and we'll be targeting this low as your target had taken entry from here. If it's a double bottom, you're looking for this to happen. You're looking for your entry again, the double bottom, targeting this previous level. Okay, so that's what you're looking for using those patterns. So I'm going to look at this area here now. Let me just remove all of this off the chart. So let's zoom into that current, oops, to remove that again. Sorry about that. So let's move into this area on price chart. Understanding that your retail concept, you're looking at this double top in the market. So you're looking at, this is your reversal and you'll be targeting this low. Okay, so yeah, we do come to this low, but if you're taking an entry right here, using a retail concept, you're expecting the market, and we do get a run down, you're expecting it to go all the way down to this level. Now what happens? Well, again, the manipulation happens. This is your manipulation phase. We have a push up, breakout, that is bringing in buyers in the market, those breakout buyers. We then have a reversal with a nice bearish engulfing candlestick. That's your entry. If you want to take it off a candlestick pattern, there's your first target. Okay, now for me, that wouldn't be my first target. My first target would be looking at this area of imbalance to be filled, which it is right there. Then we have a pullback and then a continuation to that final target. Now, yeah, this is not a great risk to reward, but it's teaching you, that the concepts that you've already been taught, if you're a retail trader, do not work. But this type of trading will, and it will help you to find out what's going on. Now, sitting here above this high is what we call our area of liquidity. So above these highs is basically stops in the market where people have already sold, especially this high in the market, where people have sold thinking of this double test at a previous high in the market to continue down to take these lows. But understanding the concept here that the liquidity, where we see the stops are taken, then the reversal, is why this happens. And exactly why they push the market up to take those stops, run those stops. You see the stops have all been placed above these areas here in the market. They know where they've been placed. They run the market, take you out, and then push the market down. This is where you're left frustrated. Again, leave a comment below if this has happened to you and you see this happening at these types of patterns. So I hope this video has been educational today, and I hope it's given you an insight to why I've now quit trading using these sort of patterns of retail concepts and even the trend lines as well. Now, what I suggest doing next for your education is watch this video popping up right now. It goes through the only daily directional bias trading strategy you will ever need in your trading. It goes through the understanding of all these concepts and more to help you in your trading.